All right, everybody, Happy New Year. Happy New Year. I am really excited to talk to you guys today about estimated taxes. So it's the time of year where people are talking about this. It's the beginning of January, and there's kind of a lot of talk and chatter. So what I wanted to do today is make sure that you guys have what you need in order to pay estimated taxes for the previous year. Now, and this is a video that we've accumulated best practices. So we've done a couple different videos on estimated taxes before. We've talked about how to pay your estimated taxes and how to calculate your estimated taxes. And so we'll make sure to link those videos below and also put them at the end of this video. But if you haven't watched those, it's actually okay. You can go ahead and watch to the end of this video because it'll be full of tips, and then we'll direct you in the right to the right places for those other pieces of information as well. All of this will give you a lot of great information on what are estimated taxes, how to pay them, and some really good tips along the way. All right, but first, if you aren't already subscribed to the channel, we would really appreciate you subscribing to the channel. We have a goal to grow this channel to 100,000 subscribers in 2023, and we'd love you to help be a part of that. So, this year we've got a lot of great content coming out to help your small business. So if you want to make sure that you are getting notified about those, make sure you're subscribed and also click the little bell button so you can make sure you know whenever we put out a new video. All right, but let's get started with talking about estimated taxes. So the very first thing you need to know is that the last estimated tax payment of any year is going to be January 15th-ish. So I say ish because if the 15th falls on the weekend, then they're going to do it on the next work day. So in this case, I'm talking in 2023. So January 16th is actually our due date for the Q4 estimated taxes. Okay, so keep that in mind. Before we get into best practices, I want to just cover two things real quick. So first is that why we pay estimated taxes. We go deep dive into it into the other video that I will link below. But the basic point is that the IRS wants us to match our revenue and our profit to around the time that we pay our estimated taxes, okay? So they are trying to match, like if you got a W-2 income and you were getting a paycheck every 2 weeks, they would be taking money out of that paycheck. And so it's matching the earned income to when you're actually paying taxes. So by paying estimated taxes, you're kind of doing a similar thing, but for business owners, we get the ability to pay quarterly rather than that every paycheck. It's not like we have to remit taxes every time somebody gives us money, okay? So keep that in mind. That's kind of just will help you kind of frame why we're doing this. And the second thing is that the IRS will penalize people if you haven't paid in enough estimated taxes or you haven't paid in enough of the tax liability. I explained that a little bit more in the other video, so I'm not going to go into that here. Let's go ahead and get into the best practices that I want to tell you guys about. So like I mentioned before, I have been serving small businesses for over 10 years, and I wanted to accumulate these best practices for you guys. So let's get into best practice number one. So best practice number one is that you make sure you're calculating your estimated taxes rather than just going off the coupons you get from your CPA. So those coupons can be really great and they can give you a guideline, and if you're just trying to pay what you paid last year, those coupons are great. But you need to also be calculating your estimated taxes, because what this does for you is it will help you if maybe your year was better than last year than it was this year, or maybe you've had some other things happen in your life, like your whole tax life, that maybe might lower your liability. You want to make sure that you are looking at those estimated taxes. Or on the other side, if you've had an amazing year and you're just gonna do so well, you are probably gonna have a really high tax liability, and you don't want to be caught off guard with a huge tax bill at the end of the year where you had no idea you should have been saving so much for it. So really you want to be kind of keeping tabs on what your tax liability is throughout the year and calculating it using a tax worksheet like the 1040 ES, or using our calculator, which is built off of that. You can get closer to your actual tax liability, and you can use it to strategize on how exactly you want to pay it. Now, the other video I mentioned before on how to calculate your estimated taxes does have more discussion about strategy on that. But that is tip number one, is don't just rely on the coupons, okay? Calculate your actual amount. Now, we have updated our worksheet. So if you've purchased our worksheet in the past, you can go and download the new version because we've got 2023 tax brackets in there. And then if you haven't gotten the calculator worksheet before and you want to grab that, it is a few bucks. You can get it in the description box below. We'll put the link down there. People love that worksheet, and we get really great feedback about it. And a lot of people tell us that we should charge more for it, but we haven't changed the price. So if you want to go and check it out, make sure you go and grab that. And we've been updating it throughout the year. So this is our third update to that worksheet. The second best practice I want to tell you guys about is to save for your taxes monthly. So yes, you need to pay the taxes on a quarterly basis and do like a full calculation, but I want you to be in the practice of looking at your profit and saving on a monthly basis. It's an easier, more natural rhythm to think, okay, our financials are done. Let's look at our profit, see how much profit is there, apply a percentage onto it, and put it to the side. Okay. So if you look at it monthly, you're going to take little bite-sized chunks along the way if you need to be saving, and it's not going to feel like such a huge burden when you need to come up with a whole quarter's worth of money to actually make the payment. So really look at this on a monthly basis. I run a P&L and a profit and loss statement. So once my books are done, I run a profit and loss statement. I see what the profit is, and I apply a percentage. I take that percentage of basically kind of like an average effective rate that I've had in the past. If you have no idea where to start, I would say maybe start at 20%, but do the calculation, and then you'll be able to calculate what your effective tax rate is. And then if from the worksheet that I mentioned, or if you have it from your CPA or something like that, what is your effective tax rate? Multiply that times your profit, and start saving that amount of money every single month. And when you save that amount of money every single month, then you are going to be in a really great place when you actually have to go and make the payments, okay? And then if you oversave throughout the time, and then maybe you have a lost month or something, that's fine. You can just move a little bit back into your operating account, or you can, just keep it in there for the next months that you're starting to make a profit again. The really wonderful thing about setting the money aside is it's just kind of separating your brain from thinking, hey, that's money I can use to operate the business. And that gets into the best practice number 3. My best practice number 3 is to actually set up a separate bank account specifically for your taxes. This concept was kind of made popular by the author Mike Michalowicz, who wrote Profit First. And honestly, this is one of the only things I really like about that book. It has some other good things too, but like this is one of the big takeaways that I really like about the book, Profit First. I actually don't really want to recommend you guys reading it, but if you have read it, you know what I'm talking about. But the concept is that you actually set up a separate account to move money into so that it doesn't get blended in with your operating funds or other things. So I really like that. You can usually set up another savings account with any bank that you have. If you already have a checking account, you can just call them up or walk into the branch and say, hey, I'd really like to have a savings account as well. Sometimes you can even change the label of the name in when you're in online, and you can actually change it to say tax savings account. And then you just very easily transfer some money in after you've done your monthly review. You can transfer how much you think you need to save for taxes into that account. And this is really great. I do this for my own business. We do this for our clients where we tell them how much they need to move over. And then, we'll just do check-ins throughout the year to make sure that they're saving enough for taxes. In this situation, I'm good to go. I've been saving throughout the year, and based on the estimated tax liability I probably have, I have enough in my savings account to make sure that it's that's covered. So that is super great, and it's a really good feeling when you get to tax time and you have the money there ready to do it. So really like that separate savings account strategy. Best practice number 4 is that we like to make sure that you're actually paying your taxes quarterly. So this is kind of silly because they're quarterly estimated taxes, but we like you to do the assessment throughout the year and make sure that yes, you're saving every single month, but you're actually paying out those liabilities when you think that it is appropriate. So let's say Q1 was not a good quarter and maybe you don't have a tax liability. You can actually wait to the second quarter, and then if second quarter is better, you can wait and do it then. But if you're making consistent profits throughout the year, go ahead and make those quarterly tax payments. It gets the money out of sight, out of mind, and it doesn't tempt you to actually go and dip into that if you need it for one thing or another. Or you might look at your bank account and think, hey, I have a lot of money, I'll take a big draw or I'll do something else. Just go ahead and pay those taxes quarterly. Now, I have showed you how to pay taxes and the different methods that you can do to pay taxes, and I have a separate video for that, so I will link that below if that's something that you want to see. What are your options when it comes to actually paying the taxes yourself? And the last best practice I have for you is to record your estimated tax payments properly. And this confuses a lot of small business owners because they don't always understand the difference between paying taxes for your personal liability and paying taxes for the business liability. Most small businesses are set up as what's called a pass-through entity. So where the earnings of the business are actually flowing through to the personal side of the individual's taxes. So most small business owners actually have the liability on their personal side. So they need to make, that's why we're talking about a 1040, which is a personal tax return, a 1040 ES payment. So we're not really talking about if you're a C-Corp owner and you're actually paying taxes out of the entity and out of the business. This concept is not what we're talking about here. We're talking about this flow-through income that comes in because your business is earning money over here. It's like, that's your asset if you're the owner, right? And it's generating income. And so all of that income is going to ultimately be reported, and I'm doing this flow-through thing. So business, 1040 over here on the personal side, that's gonna flow through to your personal income. So with that, when you make a payment, you can save in the business, but then when you make a payment, it actually gets recorded as something called a shareholder's draw or an owner's draw or a shareholder's distribution. It might be a partnership distribution. It could be called a couple different things, but that draw is actually a balance sheet item. So it's not going to show up on your profit and loss statement, which means it doesn't reduce your taxable income. So let's say you have $100,000 of profit and you're paying 20% of it to estimated taxes. That $20,000 is not going to reduce your profit to $80,000, okay? Profit on your profit and loss statement stays $100,000, but that $20,000 gets recorded on the balance sheet. And my best practice for you guys is to actually set up a separate equity account called Shareholders Draw Taxes, so that if you're taking other draws, maybe as part of your compensation plan, that's separated out from what you're actually taking from a tax liability. And this is really helpful when you get to the end of the year where you can look and say, okay, how much did I have that was like my income? And then how much did I take out that was actually more related to taxes? And it's really clear and easy to see it. So we just literally label it, and I'll try to put an example right here for you guys where it says shareholders draw and then shareholders draw taxes, okay? So this is super helpful. It's really a best practice. Whenever I see that on a client's balance sheet, it always makes me really happy. And we're moving all of our clients to also do that as well, because it creates a lot of clarity. And you know what we like here? We like clarity, okay? Well, I hope that cleared up a few things about estimated taxes, and I hope that helped you guys out. Hopefully you'll take some of these best practices and be able to run with them in your own business. Again, if this is helpful, please make sure to like this video and make sure you're subscribed to the channel, because we would love to have you here and continue helping you in your small business. And definitely check out these other two videos, as they are gonna also help you on estimated taxes so you can understand it all and feel really confident moving forward into this next year. All right, thanks so much. Bye, everybody.